All right, we are officially starting the webinar. Thanks for getting in a little early and on time for those of you that are here now. And just a few housekeeping items before we get started. Quick thing is this. Yes, the webinar is going to be recorded. Yes, you'll get everything you see on the webinar emailed to you shortly after the webinar is done. It may be tomorrow morning, but it'll be either late this afternoon or tomorrow morning. You'll have everything that you see here. So you're going to get all that stuff. Yes, you can ask questions, of course. I would encourage you to ask questions as we proceed along. And the reason is that something might pop in your head. Now, we might not answer it immediately. At the end of the webinar, we're going to go through and answer questions, as many as we can. If your question does not get answered, do not worry. One of the account executives from Angel Oak will reach out to you to answer your question directly for you. So don't worry about that. But we do want to encourage you to ask them as we go through.
And Frank, you and I have done quite a few of these webinars together, and I would just encourage the questions, because that is, if you're thinking it, then someone else probably is too. So please submit those. We will absolutely leave some time to address as many as we can. If we don't get to yours, as Frank said, though, someone will get back with you with an answer.
Great. We're going to go ahead and tee this up now and kind of move this along to Tom. But before we do, I just want to set the stage for you guys. And in setting the stage, this is the new business toolkit with Angel Oak. The purpose of this webinar is to give you some tools and some things actually in your hands that you're going to get after the webinar that you can actually make use of to go out and start to generate some new business. One of the best ways to create new business in a tight market is to use some sort of a niche product that can help open doors. Because what we want to do is open some doors with some new prospects that can refer you some business. And the way to get that done, or one of the best ways to get that done, is absolutely with non-QM products, because it's an easy script. It's an easy thing to talk about. It's an easy way to get a door open, have somebody say, yeah, come talk to me. The goal here, guys, is to go through and actually look at some scenarios that Angel Oak has done. That's how we're going to start. And Tom's going to show you some genuine scenarios that might kind of open your minds and open your eyes to, wow, what can actually get done. And these are the type of products that you're going to be able to use to open the doors to get some conversation started with some new referral partners. And not only that, but you may actually recognize that, goodness, I just lost a deal, or I just turned down a deal that I think I could have done. So there might be some stuff in your pipeline right now or recently that you'll be able to maybe flip over to Angel Oak right away. So we're going to go through those scenarios. We're going to understand the products, how they work. Then we're going to show you really quickly how to jump on the Angel Oak website, get a quote, a real fast quote, in case you do get a lead in, how you can price that effectively, how you can get started with Angel Oak, how you can find an account executive. And one of the most important things about this toolkit is how to get the marketing materials to go out and start generating this new business. Then we're going to move into my segment, which is the actual, how do I find new prospects? Where do I find them? And what do I say to them? What's the scripting to get the door open, to get me together with them, to have a sit down or a drop by, so I can start communicating with them, so I can, in my attempt to create these new people as strong referral partners that will send you not only non-QM business, but probably other business as well. So that would be the goal. Then we would open it up for Q&A. So that's kind of the tee up. That's kind of the flow. Tom,
Frank, I'm excited, man. That is so much great content. We got a lot of things to do now.
It's awesome, and we're going to get it all done in like 45 minutes. So we'll start by handing it off to you. The screen's already in your control. Tom, I'm going to mute you so I don't have any noise bleeding in on your end. And I may chime in from time to time just to say something, but take it away. Let's go ahead and see the scenarios. Remember, guys, ask questions as we go. We'll get to them at the end. Take it away, Tom.
Yep, absolutely. Thank you, Frank. Great intro. And again, I'm excited to be here with everybody. And hopefully this is going to be, one of the best hours you're going to spend this week. And we're going to give you so many resources and so many idea starters. As Frank said, it's really about, these are conversations for you to begin having. And we believe, and we've seen over the last 5 years of doing non-QM kind of exclusively, that these products and programs open doors. And really, Frank had mentioned that there are niche products. They're not as nichey as you might think. They're just borrowers that have been locked out, that just have not been able to get financing post-crisis. Some of them may already be familiar to you, but I wanted to really just kind of start with some examples, because we get asked that a lot. Non-QM sounds great. I've heard about it. What is non-QM? So we thought it'd be a great idea just to start this with a couple of real life examples. These are loans that we have closed recently, and maybe you can think of them in your past, or really just get your mind around these are the kind of loans, borrowers, etc., that I need to be on the lookout for. But we had a loan last week. It was a $1 million plus home. I think it was 1.3, as it says there on the screen. But the borrower had a foreclosure 2 years ago. And what's interesting to me is that everyone knows about the foreclosures that happened during the financial crisis. I want to say there were more than 16 million total foreclosures from the 09 to 011, 012 range. And so a lot of people believe, well, we're kind of past that period of time, but that's really not a true statement. Last year, there were almost 2 million foreclosures. So foreclosures happen on a regular basis. There's life occurrences, there's divorces, there's just things that happen that cause foreclosure. There's job loss, there's medical issues. So we had this scenario where a borrower who could fully qualify for a super jumbo $1 million plus loan, but they had a foreclosure just a couple years ago. And anybody who knows prime jumbo guidelines, you have to have pristine, almost perfect credit for minimum of 5, but normally 7 years. So this borrower who wanted to buy a $1.3 million house, but had a foreclosure 2 years ago, really found that was difficult. And those lenders that were just representing prime jumbo and agency loans and FHA, Fannie Mae, that those products are not really meant to take care of somebody who's had a couple dings or a life situation occur. So we got this loan. Again, I believe it was an 80% loan. The borrower put 20% down. They had great income, great assets, but they had that foreclosure, and that really, stopped them from qualifying through the more traditional routes. So we got this loan in. We were able to underwrite it quickly, clear it to close, and that borrower got into the house, just like we were talking about, Frank, just in time for summer, because believe it or not, summer's not here till tomorrow. So that's one loan. Recent foreclosure is kind of really the takeaway from that, and then the jumbo loan amounts. These loans go up to 2-3 million. So you're not restricted on how much, what size loan that you can get for these borrowers. All right, this scenario is something that you should really understand and become an expert on, because everybody knows these borrowers. This is for the self-employed borrower who, when you're talking to them, they tell you what their income is. And I'm guessing everybody that's in this call has had a scenario where they tell you the income, then you get their tax returns. And guess what? That income on their tax returns doesn't really match what they told you. And it's not nearly enough to get them qualified. So our bank statement loan fits the need for that exact borrower. They generally don't have credit issues. They generally have really good assets. And what we're looking at, instead of their tax returns, we're looking at their bank statements, either personal or business bank statements, and we're looking at their monthly cash flow. And the cash flow, as we know, that's what people pay their bills with. It's their monthly cash flow into either their personal account or their business account. And we use that to qualify borrowers. But this was a borrower who came in and said, hey, I make $200,000, but their tax returns, they had a good accountant. And that's what accountants' jobs are. They're there to take advantage of our tax code and write off what is allowable within the tax code. But again, that doesn't, in our opinion, that doesn't really reflect someone's ability to repay a mortgage. So what we do is we look at the bank statements, determine what their cash flow is, compare that to their debts, and then we come up with a debt to income based on cash flow. Again, personal, business, either one works. But we had a borrower with a 758 credit score. They wanted a $750,000 loan, and we were able to get them qualified based on their bank statements. But their tax returns, they had no chance of qualifying for a jumbo loan. So again, these are borrowers. In fact, I was talking to some people last night at a little realtor event, and the realtors were like, oh my goodness, I know so many self-employed people that I've sent them to a traditional lender to qualify for a traditional agency loan, and they can't get qualified. So realtors get really excited about this program. Generally, we allow some lower credit scores. We allow some credit issues, some foreclosures, but we do have some seasoning requirements. But this borrower is everywhere. They're in every market, and they have been cut out completely post-crisis. So bank statement borrowers really become an expert on that one. Another scenario that we see that pretty often is, through the crisis, a lot of people became real estate investors. The property values were very depressed for a period of time, so a lot of people purchased and became landlords, and they became real estate investors. But we know with real estate investors, there are limitations on what type of conventional agency loans they can get. So Angel Oak, we have a product, we call it our investor cash flow, that we're not looking at the borrower's personal income. We're not looking at their tax returns. What we're looking at is the investment property they're purchasing, and what is their what is their cash flow on that property compared to the debt. So we are going to look at the borrower's credit. We are going to look at the borrower's assets, but that's it. The next qualification is the property itself and what type of cash flow does the property produce, and then compare that to our debt that they're going to take on through our loan. And we see these loans all the time. So again, we've got credit issues, and so really kind of here's some high level. We just want to make it as easy as possible for you to remember. So we've got the investors, we've got bankruptcies and foreclosures that their seasoning period is less than what is required for agency loans. What we just talked about, the self-employed borrower who can't qualify with their tax returns. We also have borrowers that just have low credit scores. Frank, you and I have talked about, there's data out there that 50% of Americans have a credit score below 680. And to me, that is a statistic that so few people know. So you think about it, 680 is a big cutoff for kind of that prime borrower. But half of Americans, they just fall out of that because of their credit score. And on top of the 50% of 680, a third of Americans are below a 620. So wow. We're talking about a very large population. And what I would tell you is that we don't believe every borrower with a credit score below 620 deserves a house or should get a house. But the population is so big, there are thousands and thousands of borrowers in those groups that do deserve a loan and can qualify, but they're not going to, they're going to have a really difficult time qualifying for agency and government loans. So just open your mind. We're talking about a big pool. And if you don't participate in non-QM, you're almost cutting yourself off of half the population, half the potential borrowers because of how great that number is. So anyway, I thought that was kind of a good thing. And just so low credit scores is what got me thinking about that. But we also have a loan, what we call an asset qualification. That's for the person that has a lot of assets, but their income is not something that's easy to document. We have a loan that we believe has proven to be a great loan for those borrowers, and we call it our asset qualifier. So just kind of a good start, high level. These are the kind of loans, these are what non-QM borrowers, non-QM loans look like.
So, Tom, obviously, if people aren't familiar with the products and that type of a thing, they're going to need to get a little more familiar with that. What they may run into is I think I got something that might fit into the Angel Oak world. How can
Yes.
we quickly kind of put a scenario in and just kind of see if it's even in the ballpark for us to get started? And then if it looks like we can possibly do something, how do we get started with Angel Oak and maybe access the marketing materials that we can use to go out and get some of this new business in?
Yeah, no, that's great. Let's start there. And so, some of the things that you just said, Frank, are easy, quickly. That's what we believe in. We believe answers, and time is money. So we want to give you as many tools, and we've created tools on our website that can help anybody who's on this webinar get answers quickly on scenarios. So the thing that, if you walk away with a handful of things today, one of them is our website. It's really simple. It's Angel Oak MS, which is Mortgage Solutions, angeloakms.com. And that's where you can find lots of resources. But quick, let's focus on quick. Let's focus on speed. Right here on the very first page of our home page is the quick quote. And if you go into the quick quote, you're going to find out how easy it is to qualify these borrowers preliminarily. So all you do, you follow our website, you click on quick quote, then you're just going to enter a little bit of information. First, let's start with credit score. I mentioned, we're seeing borrowers with higher credit scores these days. So you put in whatever it is. So you start there. Loan amount, let's put in a 750 to 999. Loan to value, we go up to 90 on some programs, and you just pick whatever it is. But so let's just say 80% for this example. And then housing history. Let's say that they had a foreclosure, or we'll just start with they've had a clean housing history, which most borrowers have for the last 12 or 24 months. As soon as you answer that question, you can see right here, Frank, that the options of potential loans pop up. And so the names of the programs on the left column really don't matter and don't mean anything to you, but they do have a little bit of information on it. So we ask for an 80. On our platinum program, we can actually do a 90%. It has the borrower paid rate. We also offer lender paid compensation, but then bankruptcy and housing event, meaning foreclosure or deed in lieu, seasoning requirements, some reserves. Again, high level, but it's a great starting point for you. And what did that take? About 10 seconds for me to answer those questions. And the other piece is you can just change it and the scenario will change. So let's say I want to go to this borrower wants to make a significant down payment. So I'm at 60%. It automatically modifies, changes the rates, gives you everything that you need to know. So let's go to bank statements, 12-month personal bank statements. Boom, change that, tells you the LTV. Okay, we can do up to 90. We asked for a 60. I changed that to 75. Again, it's super fast. It's super easy. You can change it to your scenario. What we like to tell our customers is to use this just as a starting point to have that conversation either with a realtor who has a borrower that they're working with or directly with a borrower. I wouldn't focus in on quoting rates and things like that, but just, yes, this looks like something we can get done. And really that's the first point. Then
And in this scenario right here, here you've got a guy getting a jumbo deal, right, at 75 using bank statements to qualify.
Yeah.
Good stuff.
Well, wait a second. Let's change it to 90. Oh yeah, we can do 90 on that as well. So it's right there. It moves as you move, and you can modify it. And again, starting point. This is not, don't take this to the borrowers. This is the program I got you, but it can start the conversation that, hey, looks like we have some options. And another thing to note with Angel Oak, any of our products that are over 80%, there's no MI. So this 90% that we're looking at, there's no mortgage insurance for a $700,000-$800,000 loan at 90%.
That's pretty awesome.
Yeah, neat. So then. Okay, I've seen it. This looks like something that looks good. The next button that you want to click is right here. It's called our pre-qualification request. And again, quick, easy, that's what we're trying to do. And you click that, you follow it. You would start just selecting your account executive. We have account executives all over the country, and you select them, you fill out a little information about yourself and your company, then you upload a 1008, a 1003, and a credit report. You make any comments here that you want the account executive to know about this transaction, hit submit, and that immediately goes to the account executive. So you don't have to pick up the phone, you don't have to leave voicemails, you don't have to email. You go here, you click submit, and it's in the account executive's hands. And our AEs, they're out working in the field most days, but they're going to get you an answer within 24 hours for sure. So, use the comments section, put in information that you know about the loan. But we're going to look at that 1003, 1008 credit report and get you a very solid pre-qual. And that is something that you can take back to the borrower. Once we've done that, assuming everything on that 1003 is documentable, hey, we're going to be off to the races and ready to get that loan done. So this whole process, very quick, very efficient. Again, we get back to you in writing with everything specific to that borrower. Make sense? How are we doing, Frank?
Oh, doing good. Sorry, I thought I was unmuted.
Okay. Yeah, no problem.
First thing is pick your account exec. So do we get approved with Angel Oak first, or can we, if we're not approved right now, can we at least kind of start something, or how does that work?
So absolutely. So everything that I'm showing you on the website is available to anyone. So right here, contact Angel Oak, we have find an AE. So if you don't already have an AE with Angel Oak, you click on this, it has a map, you just click what state you're in. Let's just say Arizona. It'll pop up with who you can contact, and then you can send them an email, you can call the regional sales manager, and we're going to get somebody in touch with you really quickly. So, but you can use Quick Quote without an account executive. You can submit a pre-qual. You can even say, I don't know who my AE is, and we'll get you to the right AE. So reach out to an AE, submit the pre-quals. Broker package right here on our homepage next to Quick Quote. Broker package, really simple. If you're not approved with us, you just follow along, download it, fill it out, and get it in, and we'll get you approved and ready to submit loans. But we can do quick quotes, we can do pre-quals while that process is happening. We just can't accept a loan and give an underwriting determination and obviously close it until the broker package is complete. So that's that. The other thing is, once you're approved, I think this next section, Frank, if anybody's on this webinar, you're not paying attention, pay attention now. Once you are an approved broker, you will be given login credentials. So you'd go to our same website, you'd hit login, you'll be given your own username and password. And when you click that, that's going to allow you to access all of our marketing materials. And I know you're going to talk a lot about that coming up, Frank, but this is where it's at. This to me is how you as an originator truly differentiate yourself from the market, from your competition. But we have this entire portal. It's right here. We have flyers, and I'll just show you. We have a whole library of flyers for you to choose from. But what's awesome about it is you just click on one of the flyers, and notice this is our bank statement program, but it says nothing about Angel Oak on it. So you would put your logo at the top here. You'd go down. Here's some bullets, some information about the loan itself. Then you would put your name, your title, all your contact information. Then you can save it. You can print it. You can post it. You can email it. Use social media. Get this out there. Differentiate yourself. Let your referral base know that, hey, you're doing some different things now, and you can help everyone capture more business and close more deals. So we have a whole slew of these. I'll also go some videos that we've created. And again, anything that you find on this site has nothing about Angel Oak. So these whiteboard videos, these are little 1-minute clever videos. I'm not going to play one now, but you can go on our website, click on them, and then you can save it. Again, you can post it on your social media, and it's just some like 1-minute videos. We've sent them out before, and we've gotten such an amazing response from our customers that they said, will you please make these available to us? And that's what we've done. So
Yeah, I'd send one of those a week. I'd be posting one of those a week on Facebook. Why not? You know, in a scenario like this, give me a call. Whoop. I mean, why not?
Yep. Simple enough. So
that's great stuff.
All of this is just, all these resources are at your fingertips on our website. Find the AE, run a quick quote, submit a pre-qual, get a broker package submitted. Once that's done, then you have access to all this marketing material.
Awesome stuff. Thanks, Tom. Let's move on to the scripting piece. What do you think? If we can see how we find some targets and how we can locate them and what we can say to them to kind of open the doors. Now, I'll take that over.
Okay.
Let me just find me so I can bring things back over to moi. And Tom, I'm going to go ahead and mute you, or if you could turn the volume down on your system a little bit, just because I'm hearing myself come back through your speakers a little, and I don't want it to be too distracting.
I'll mute it. How about that for now?
Oh, if you could mute it, and then just unmute and pop in if you'd like to interact and bring something up, because I'll probably forget something, and I know you'll remind me, so that'll be great. So thanks, Tom. And I think everybody can see that, obviously there's some, in those 3 scenarios, there's some stuff that we can use, based on the marketing materials that we have together over there, that we can really use to try and open the doors. But what I wanted to do today was, I'm going to tell you, of course, with these products and with the marketing materials that we have through Angel Oak, we can absolutely go to our existing real estate agent database and start there. We can just make our existing people who we already have relationships with aware of, what's out there that could definitely bring you some new business in. But I also wanted to look at this and find a way to take advantage of it to find some new referral partners and that type of a thing. So the first thing that I'm going to want to talk about here is indeed referral-based targeting, to find some new prospects that I can kind of open the door with, to have a conversation, to maybe start getting some referral business out of them. Now, what I'm going to show you guys is how to get the door open and to get to a point where you can go and actually meet with these people. Once you're there meeting with them, I don't have everything scripted out for you what to say when you're there at the table with them. I'm hoping that you're going to be able to just have a nice, comfortable conversation with them about the things that you can do, show the Angel Oak products that you can, or the Angel Oak scenarios, the borrowers that you can help, that they might come across, that type of thing, and just have a nice casual conversation with them, exchange business cards, and make sure you do your follow-ups, but just to start that new relationship. We're talking about opening the door to a new referral partner, to start that flow of referral business actually back and forth, because we're talking about realtors here, we're talking about CPAs. These are people that you may have clients that you can send their direction as well. I certainly would have that as part of your dialogue when you're having your sit down with them. But let's talk about just how we can reach some new people and have some new appointments to get some new business and some new partners. So we're going to talk first about referral-based targeting. And this is going to be really specifically toward the real estate agents out there and the certified public accountants. And the way that we found works really, really well is obviously when we're going to target new realtors and CPAs, we're certainly going to want to work through our industry peers or our friends right off the bat in any way that we can. If you happen to be, face-to-face with people, or perhaps at a mixer or whatever the case may be, you're certainly going to want to, take advantage of those scenarios. But another way that you can do it, guys, is with this simple little email type message that I have up here in blue. It says, I'm looking to connect with some real estate agents and CPAs that I can trust. If you have a recommendation, can you send me their contact info? Thanks. Now, I wouldn't necessarily, if I'm a mortgage person, just make this a public post on Facebook, because you probably got a whole bunch of real estate agents already that know you on there. They're going to be like, well, what about me? Can you trust me? I would be more like sending an email to my past client database with this little message. Hey, I'm just trying to connect with some real estate people and some CPAs that I can trust. if you know of anybody, can you send me their contact info? Thanks. And I think you'll find that you'll get a good response. You'll get people saying, yeah, I like this person. I like that person. Here's this person's name. Here's that person's name, right? And with respect to social media, I would do the IM or the instant message. So you go through your Facebook, see all your friends, people that you're kind of friends with, people that you're certainly friends with. Just type this initial little note in there. Hey, man, I'm trying to find some agents and some CPAs that I can trust. Just want to do some business with them. Is there anybody you can recommend to me that you know? And then I would copy that and then, instant message this guy, send it, pick a new guy, paste it in, send it, pick a new guy, paste it in and send it. And I think that you'll find that you'll be able to get a lot of feedback and a lot of referrals sent back to you. So first things first, let's just get the word out that we're looking for some realtors and CPAs to people that we feel like can maybe refer some people in. So that's what I would do, and I would use that specific wording or something close to what I've just worded here in the blue bubble. Okay. Next, what you want to do is when you get some referrals, and they will come in, some realtor referral, people will say, hey, try this realtor, talk to this realtor, or talk to this CPA or whatever. When you get the information on those people, do your research first, and there's a reason for this. You're going to take advantage of this information when you make your call to them, because you are going to have to call people, and that's how this is going to go down. This is definitely a belly-to-belly type of a thing, but that's what you want. Those are real relationships, and those are real strong referral relationships. So you get CPA's name, Google them, LinkedIn, Facebook the person, and what you're doing here, guys, is really just trying to learn something about them. You might see some reviews on them, so you kind of know what you're working with there, bios on them. With bios, oftentimes you'll find things that they like, things that they have interest in, which you could use to your advantage. Things you might have in common with them, people you might have in common with them. You're just kind of getting to know the person a little bit before you make the call. So when you get these referrals in from your friends and whatnot, just do a little research on them before you make the call out to them. So when we make the call, we want to kind of go over this slide, and you are going to get this. Don't worry, we're going to email this to you, but there's these 5 things that you kind of want to keep in mind before you actually make the initial call to the person. So just to refresh yourself before you make the call, so you know what you're kind of doing. So number 1 is connect, which is when you get them on the phone, certainly you're going to identify yourself. I would, and you'll see from my script, which is coming next, I would identify myself and say I was referred by so-and-so, okay? And then when you do that, that's going to, kind of set the tone a little bit there, because you have this common person that they're going to be the guard's going to come down a little bit and go, oh, okay, yeah, Mary Smith, yeah, she's awesome, yeah. Then number 2 here, it says recognize, say something nice about the prospect, let them know you had time, you had taken time before you called them, to admire their accomplishments. What that says to me here is if you take the time to learn a little bit something about them, you could say, oh, I noticed on your bio that you're a Lakers fan. You know what I mean? Yeah, I just want to let you know I'm not, but I still like you anyway. That kind of a thing. Are you there, Tom? Did you want to say something?
Yeah, Frank, I was just, I love that. And I can even attest that, somebody calls and mentions where I went to college or knows something about me, not in an intrusive way,
right,
but kind of lets them know that, hey, you took the time to do a little research. And again, you don't want to say, hey, I know your 2 kids and, not but just something high level so that, hey, I see you live in Sacramento or whatever it is, just something, a Lakers fan, a college, or an interest that they have. And that's kind of a bond. You might even get that from the person that referred you to them. So
possibly
something to ask about, but I love that point.
Yeah, thanks, Tom. Yeah, for sure. And again, good point. Yeah, you don't want to, if you saw that they just had a birthday with their, he just had a birthday party with his 12-year-old daughter and her friends somewhere. You don't want to open with that. Hey, how'd that party go with your daughter and her friends? It's more along the lines like what Tom is saying. It's like you can see music interests that they have that match yours or that you're familiar with, or like Tom said, colleges or anything. Really, if you can find their bio, that's kind of a good place to go with. Usually people on their bios share things that are like cool things to know about them that, anyway, like Tom said, if you just do that little legwork, if you make mention that, you know, so-and-so referred me to you, I checked out your website, I see this about you, and then have a little brief thing to say about that, it just helps to further what we're trying to do, guys, is we're just trying to break down the barriers, right? Anytime any of us gets called by somebody we don't know, immediately we've got, you know, 6 walls of barrier up. And if we can just let them know, number one, I was referred by this person, well, a few walls may drop. Hey, I visited your site, I saw something cool about you, this is neat. Some more walls drop, right? Then we get to the value, what's in it for them, and that's going to be taken care of in my script. I'll let you know just when we get to the script, you'll see what I mean by that. And obviously the value will be something relating to the niche product, to the non-QM product that might be able to help them. Then this is a good point. Once you kind of do your little quick pitch, make sure you listen close. Listening carefully is a benefit because you might find a way to ask another question to go a little bit deeper to, you know, further bond with the prospect and further secure, you know, number 5, which is trying to get a commitment to either stop by and visit with them or maybe meet them for a cup of coffee or something like that. So before you make your calls, I would bring up this slide on your computer and I just run through it real quick in your head, just so you kind of got yourself mentally teed up to make the call. When you do make the call, very simple script for real estate agents. If these are new realtors, you know, say, hey, I'm Frank with ABC Mortgage. I was just referred to you by Mary Smith, and I'm calling because I've got loan products that can help borrowers that don't fit into your typical conventional or government loan financing. I was just hoping I'd maybe just drop by and meet you, or maybe grab a cup of coffee so I can show you what I can do. In case, you know, a borrower that fits this kind of scenario or is unable to get some traditional financing might come your way. Is it possible to get together or drop by and meet with you? And so, as you can see, we're stating the value proposition is we might be able to help them with something. And what's in it for them, you know, is they might be able to obviously get some buyers through or some clients through that they weren't able to get through beforehand. So this would be a good little break the walls down opening script for the real estate agent targets out there. CPAs a little bit differently. You know, I'm Frank with ABC Mortgage Company. I was referred to you by Mary Smith. I'm calling because I have loan products that can specifically help self-employed borrowers that don't fit into typical conventional or government loan financing. So I was hoping to maybe drop by and meet you for a cup of coffee just to show you what I can do in case you come across a client that wants to buy or refi their home but just can't get that traditional financing due to their tax returns not reflecting enough money because you do such a great job as a CPA. You know, can I maybe drop by this week or next week or have a cup of coffee with you? So these are the scripts that I would recommend. Of course, you can internalize these, you can put them in your own words, but I think the key points are here. You know, we're mentioning the referral, right? And we're giving them the value prop, which is how I can help them out. Remember, if you did glean something from their website or something like that you can use here, after you say you were referred by Mary, you know, Smith, that's where you could drop in something to the effect of, hey, and I saw on your website you went to Chico State, you know, my cousin went there or whatever. That's where you could drop something like that. Go ahead, Tom.
Yeah, no, I just wanted to add the value proposition of really just bringing something different. You know, that's what kind of we're talking about with the non-QM products is you're going to expose them to something they probably have not been exposed to and they're not aware of. So if you just take your mission as I just want to make people aware. I've talked to a number of our customers that simply they'll make that call to the realtor and say, hey, I'm not trying to get your run-of-the-mill, right down the middle of the fairway borrower, although I do those loans. Just call me with the ones that are getting turned down. And that's how you can start the conversation and hopefully start the relationship. So you don't have to, you know, swing for the fences and just try to hit home runs right out of the gate. Just make some contacts, make some, build some relationships, and you'll see that's going to open those doors that you talked about earlier.
Yeah, there's a loan originator in my neck of the woods, Tom, that she wound up coming to work for me eventually. I tried to recruit her for years, and eventually I got her to come to work for me because I was relentless in my pursuit. But she was she probably still is today, one of the top originators in our area. And the way that she did it was very similar to this, was she took the tougher deals all the time and the deals that other people were turning down. And a lot of it was the home buyer assistance type programs that are really hard to do. And she really just knuckled down and became excellent at what she did. And then she just wound up getting all kinds of business out of everybody. She was like hands down one of the best that's out here, but she did it just by doing what you said to do.
Well, once you've proven that you can save loans for a realtor or CPA who's trying to help a client of theirs, then you have every right to ask for all their business. Start small, think big, but start.
Right. Awesome. Okay, so let's move on now, and I'm going to shift from referral-based targeting, which we would do for real estate agents and CPAs, to something a little bit different now, and this would be research-based targeting of new prospects. And what I'm talking about here, guys, is builders, and believe it or not, small banks and credit unions. Builders for obvious reasons, right? Builders, they're trying to close as many deals as possible, just like a real estate company, right? Or just like a real estate office. They get buyers in there that apparently look like they're going to be able to get a deal done and things fall out. Or they get a borrower who's really motivated on a particular property. They'd really like to sell it to them, but their existing lender is telling them no. Builders run into these type of scenarios all the time. And of course, every loan officer in the world would love to secure a builder account where they're getting a steady stream of referrals. So if you can break into a builder, picking up their fallout or their tough to do deals, you can certainly become, at least their number two, maybe even find yourself becoming their number one. Happens all the time. And I'm also going to bring up small banks and credit unions. Tom knows this is one of my favorite ones. But in your local area, I guarantee you've got a handful of small little local banks or small regional banks and local credit unions that do mortgages. But these guys, when it comes to the small banks and the credit unions, a lot of them really are just going to be the plain vanilla Fannie Freddie Govy guys. They're not going to really go outside of the box at all. They typically don't, dive into the non-QM type products at all. And they've got a built-in book of business, which is all of their banking customers or credit union customers. So you've got loan originators that sit in these small banks and credit unions that are getting deals on a regular basis, and they just simply can't do them all. They can't. And so going in and making friends with some of those guys can be pretty fruitful, because if they can't get it done, they'll say, I know a guy who might be able to help you. I know a gal that might be able to help you. Give this person a call. And so we'll talk about how to script properly for those guys, for both builders and for small banks and credit unions. But before we get into the scripting, I want you to think about a couple of things. And first thing we're going to talk about is how do we find these new targets, these builders, these small banks, and these credit unions. I got to know where to look first. Google Maps, my friends, is your huckleberry. Okay, Google Maps is going to show you where all these small banks and credit unions and home builders are. So we're going to target some new prospects through doing research on Google Maps. And what I would like you to do too is when you jump into Google Maps and you start looking, I just want you to mentally expand your radius on this. I live in Vacaville, so you can see dead center here on this map is the city of Vacaville. But you can see if I spread out 60 miles and I just put a circle there, a 60-mile radius, I have got a lot of cities around me within 60 miles, which is about an hour's drive for me in any direction, depending on traffic, right? But I've got, about a 60-mile radius where, I can really start to target some of these small banks and credit unions and builders. And just so you know, I'm in Vacaville. I've worked here, Vacaville, Fairfield, in the mortgage space for decades. And I have had builder accounts as far up as Sacramento. I have had them down in Stockton. I have had them down in the Berkeley area. So you can see those are just kind of around the edge of my circle there. It is not uncommon at all to get business from a builder who's 60, 70 miles away. It's not uncommon at all. Did I have to go and sit the builder on weekends? I did, but I liked it because there's always activity coming in, and there was always deals to be had. And then also, this is the kind of thing where if you do have a team and you need coverage, now you can start sharing the wealth a little bit, letting some other originators go out there, or assistants or whatever, go out there and spending the time there. But let's start here. Let's first talk to them. Let's first find them. and let's go approach them and start trying to do some business with them. So I'm just saying, expand your radius, and you know in your own local area how far is practical for you to expand it. For me, 60 miles is completely practical. Some of those drives are going to be a little bit long, but if I can cultivate some new contacts out of there and get the business, I'm gonna go ahead and take it. So expand your radius a little bit. Now here's an example. The next page is I just put in Solano County credit unions, and that's a small section of my 60-mile circle, but you can see there was several. It shows 11 of them that popped up in that search, and it shows exactly where they are. And on the left-hand side there, you can actually click there and get phone numbers and all that kind of stuff. What I would do with credit unions and small banks is I'd find out where they are, and then I would click to find on their website to find out if they do indeed offer mortgages. Some small banks and credit unions don't even offer them. Okay, and I'm not going to say that's not a target, but it's a tougher target, right? You kind of want to look for the ones that do offer mortgages, because they more than likely do not offer non-QM. So anyway, you just type in something like this into Google Maps, and voila, you know, I've got 11 targets here. It took me literally 5 seconds to get into Google Maps, type that in, and I've got targets. I've got places to go. Okay, and believe it or not, same thing with builders. With builders, you can type in new homes Solano, new homes Vacaville, new homes Fairfield, new homes in particular cities, and you're going to find new homes that will pop up. Now, some of that's going to be corporate offices, okay, but some of it's actually, you know, operating subdivisions that are being built that you can get some business out of. Kind of the way you can figure that out is on the left-hand side, you see Rohnert Park there in Sacramento popped up, even though I did a local search. But remember, I'll go that far. That's within my 60-mile radius. But it says opens at 1 p.m., opens at 10 a.m., right? And there's 20 results here that I can fish through to find. But when they say opens at this time or opens at that time, then that's more than likely an actual subdivision that's up and running, something you can target. Of course, don't hesitate to make calls, you know, before you run out there, to plan your route, to figure out where you're going to go that particular day. You may pick one day a week to do builders, one day a week to do small banks and credit unions, where you kind of plan your route, figure out where your targets are, and then get prepared to go. So figure out where you want to go, but this is how you find them. If you don't know how to find them, you may already know a bunch of builders in your area that you can do this with. But if, again, expanding your radius will open up a lot more opportunities for you, and, you know, give you a what I would call a target-rich environment to where you can start making some calls or heading out the door. And that's exactly what you're going to do next. Is you're going to figure out where you're going. You're going to do a little bit of research, make sure you know you've got some fairly some targets that have a pretty high probability of being the type of target that you're after. You're going to get your Angel Oak flyers. Of course, you'll brand them to yourself, not to Angel Oak. This will all be branded to you. And you're going to grab your business cards, and you're going to tell the people in your office, bye-bye, I'm leaving. And I'm just going to point this out too, is that we'll get past this real quick, a couple scripts and into our questions. I want to get you guys out of here. But I'm going to tell you this: if you haven't been out in the field in a while, if you haven't been on a journey to the unknown as far as prospects go, I think you're going to find it extremely enjoyable. You're going to be driving, you're going to have your bottled water and your cup holder, and you're going to be going somewhere, and you're going to be walking in there unannounced and being an old school sales guy, and you're going to love it. It's going to be a lot of fun. So grab your stuff and go.
Frank, I'm thinking anybody on this call hopefully really enjoys that. I mean, that's sales. Hopefully that's why you're in the mortgage business.
Yeah.
Relationships, conversations, education, awareness, all that. It is a lot of fun.
It is getting out. I'm doing it right now with our broker channels on Keyboom, and I'm going into real estate offices in my local area to get started with it, and it's just a total blast. I mean, I love it. It's
Yep.
so fun.
Yep.
All right, let's talk script for builder. You walk on in, you see the salesperson there, you hand him or her the card, and you say, hey, I'm Frank with ABC Mortgage. I'm in the area. Just call on new home builders to see if you have any recent loan turn downs. Something you might need me to take a look at. I've got products designed to help borrowers that don't fit the traditional Fannie Freddie Govy stuff. Anything I can take a look at, or any recent borrowers that may have, you know, slipped through the cracks because of this? If they say yes, then great. Take a look at it. If they say no, no big deal. You just say, hey, no problem. Here's my contact info. Take their contact info. don't hesitate to reach out to me if, something arises, okay? And you know what they're going to do? They go, great, that sounds good. They might even have a little conversation with you. They may even put you on a list to be a backup lender, that type of a thing. All of it, the result, because you just went out there and you called on the office. Believe me, few to none are calling on these offices right now. Small banks and credit unions, the same thing. I'd walk in and say, hey, is your mortgage person here? Hey, can I talk to you real quick? My name's Frank, ABC Mortgage. I'm in the area just visiting loan officers for small banks and credit unions that don't necessarily originate non-QM loans to see if there's any recent turndowns or anything you might need me to take a look at for some of your clients. And I realize you might be might have working relationships with local real estate agents, but believe me, I want to assure you I'm not going to get in the way of any of that. Just want to let you know I'm here to help if you got any customers that you simply can't handle with your company. So with that in mind, is there anything I'd take a look at right here? Again, just trying to break down, the barriers, assure them you're not going to step on their toes, let them know if there's anything that they can't do to just, if you send them your way, they'll do your best to try and take care of them. So just simple, open the door scripting. Finally, this is it, and we can move to questions. Just remember, I say 1 year follow-up. I would say get all these new prospects that you're meeting as you're going on. Every time you get a new prospect, drop it into your CRM. Put a reminder in there, like every month, or every 3 weeks or whatever you want it to be, 2 weeks, however hot you want it to be, to follow up with these guys, either follow-up calls or visits or both, right? And do it for a year, because there's so many stories of originators and salespeople that'll tell you they worked a prospect for 9 months and they were about to stop, and then suddenly it was like, yes, you can now have all my business. It works, and it's just a phone call, a follow-up, an email, an office visit. You know what I mean? If you just keep in touch for a year, I guarantee you'll get some new stuff out of them. Go ahead, Tom.
And Frank, I know we're about to head to questions, but I've got to reiterate that piece, because we see it all the time in what we do. It takes a while to build a relationship. That first kind of stop by introduction, telling them, hey, you got any deals, anything I can help you with that you weren't able to get done? That is, if a lot of salespeople, unfortunately, it kind of expect the moon, and you'll go in and you'll make that one call, and then you never follow up. You've almost wasted your time if you don't put a strategy of follow-up as part of your plan. Whatever frequency you're comfortable with, especially when you're talking about a 60-mile radius, and you need to plan your days and your weeks out. But calling on to somebody one time and expecting the phone to start ringing is just not realistic. It takes 3, 4, 5 visits, either via phone or in person, for them to even kind of remember you and to know who you are. And so I think that's a critical piece to all of this.
It really is. Follow up and consistency wins every time. Anybody who does that is going to win. My kid's in the business. And, when he was first breaking in, calling on real estate agents, he's like, but they've already got a loan officer. I said, I guarantee you show up in that office once a week. I guarantee you at some point, you're going to take a deal from that loan officer. You're going to do it because you're there. That's all there is to it.
Yep.
Let's go to some
Very
questions,
true.
Tom.
Yeah. Okay. Awesome.
Okay. Let me see here. A lot of people saying, Kevin wanted to know where Angel Oak is licensed. If you go to their website and click on Find an AE, you'll see
that Find
exactly
an AE, the states, every state that's dark is where we are licensed. And
okay.
40 states now.
Kevin wants to know, what risk do we as mortgage brokers have in writing non-QM loans?
Well, there's really no risk. The only risk that a broker has in writing a non-QM loan is really the same risk they have in writing a QM loan, and that is fraud. Angel Oak underwrites, we approve, we close these loans. So there's zero performance risk on a non-QM loan. One thing that I didn't share today, though, is that Fitch just came out with something a couple months ago. They looked at over $4.5 billion in non-QM loans that have been securitized, because Angel Oak, we're also securitizing our production. There were 11,000 loans, and 8 of them have gone into foreclosure since 2015. So, the only risk is not doing non-QM loans. There's not additional risk, and any performance risk, that's what Angel Oak, we're here to take that risk. Fraud, of course, committing fraud is everybody's risk.
Yeah, man, create your own risk by lying on a file. There you go. Yeah, so good stuff. We have Nanette says, don't most of the builders, in-house lenders have access to non-QM loans? And the answer to that is there's no telling. Typically, it's not necessarily the case.
It varies greatly, but the opportunity is there for you to at least find out. And even if they offer it, they may not be very familiar with it, or the loan officers that they've talked to don't ever bring it up. So the opportunities there with builders and really the credit unions, like you mentioned, huge opportunity there.
Okay, good enough. We have Gail saying, you mentioned builders. Are you talking end loans? You're talking end loans, correct? You do not do construction to perm loans.
That is correct. Non-QM is really going to be the permanent financing.
Okay, here's one. Do you make exceptions on loans?
We make exceptions every single day. And that's one of the things that, we have that quick quote tool for you to kind of get just a real high level understanding is, does Angel Oak have a loan program? But when you submit that pre-qual, the 1003 and the credit report, that's when we're looking at the deal. We're looking at that borrower. And a lot of times there's something that doesn't allow them to fit in the box that we thought we could get them into. Our non-QM box is very wide, but we make it even wider because we're really looking at making good loans. And so our guidelines are just that. They are guidelines, but if a strong borrower, we're going to try to work through our guidelines and make that loan and get that borrower to the closing table.
Cool. Here's another one. On a purchase deal, can the reserves or down payment come from a gift with Angel Oak?
Yes, absolutely. We work in a world of a lot of borrowers receiving gifts from family members, and we're good with that. So reserves, we generally like for somebody to have their own reserves, but we're talking a few months in reserves, generally speaking. But gifts for down payments, we're good with that.
Here's a great one from Tamara Champagne, a good friend of mine, by the way.
Yeah.
She's got a little scenario here that I think she's going to be pleased with the answer.
Okay.
Maybe not. I don't know. 1 year self-employed, 20 years as an electrician. Okay, so he's an electrician. Okay. He's gone self-employed. She says 2017, 100,000 in income. It's probably on the bank statements.
Right.
Year to date though, 500,000.
Okay.
And the credit, she says, credit and income is stupid. So I'm assuming that she means good. Yeah, I'm thinking that she means good. That's something that plays in your wheelhouse.
So that's the 1 year self-employment is against the guy. We have to have 2 years of self-employment. But a lot of times electricians, they might have been 1099. They might have already been at some level of self-employment. So I'd say that's a maybe. We'd have to find out more. But please have her reach out to us or give me her contact information. We'll get back to her.
Yeah. Plus, this guy, if he's got 500K year to date, he might have a lot of assets. You know what I mean? That could maybe change the scenario too, right?
Absolutely. Compensating factors matter in the non-QM world.
Okay, great stuff. And then one more thing here. You guys, so Angel Oak only does non-QM. You don't do any Fannie Freddie Govy stuff.
That is correct. Yeah, we started this about 5 years ago, and we only do non-QM loans, and we really believe that allows us and has allowed us to be the experts in the space. So, you talk about making exceptions. If we were doing this as kind of a side business or, an add-on to our Fannie Mae business, we wouldn't be able to make any exceptions because we wouldn't be experts. But our underwriters are only looking at non-QM loans every single day, our account executives every single day. So we absolutely understand kind of the art behind closing non-QM loans.
Awesome. One final question, and we'll wrap this thing up. Somebody's asking, how can I tell maybe my company's already approved with Angel Oak? How can I tell that?
Yeah, we don't have approved companies listed on our website, but please contact your account executive in your area. Find that. They can tell you in a second. My contact information was up there. You can call, email me. I'd be glad to look that up for you. And if not, then we can go to the webpage and get the broker package and get that going and start doing some business, closing some loans now.
Well, that was an awesome webinar. I hope everybody got something good out of it. Again, we will send you the recorded version, Tom's scenario presentation, my scripting presentation. All that we'll get to you guys via email. We'll get out as quick as we can. And I just want to thank everybody for showing up. Thank you, Tom, for all your awesome information. And we'll sign off now. And I would say just stay tuned to the National Real Estate Post. Stay tuned to us with the Angel Oak webinar series. We continually do these once a month. We're always looking for stuff to share with you guys that can help you get some new business. At the end of the day, we're just trying to help you get some new business. That's it. And we're always going to give you the stuff. Yeah, we're going to give you the stuff that we have at the end of the webinars. Something might be just that thing you needed to go, yes, I got this. So stay in touch with us. We'll stay in touch with you with that. We'll go ahead and sign off. Okay, Tom?
All right, perfect. Enjoyed it. Thank you, Frank.
All right, goodbye, everybody. We'll catch you here soon. And don't forget to watch us on the National Real Estate Post. See you later.